Welcome to Financial Insider Weekly. I'm your host, Michael Gray, CPA. My guest today is David Howard. David is an attorney with Hoag, Fenton, Jones & Appel in San Jose. He's also an inactive CPA who was formerly a multinational tax partner with Deloitte LLP, an international CPA firm, for over 20 years. At Deloitte, he developed tax strategies for multinational corporations, Silicon Valley startups, family corporations, corporate executives, and wealthy individuals. His former clients encouraged him to return to practice, so he decided to come back and work in a law firm. David has taught extensively, including for the California CPA Society, the New York University Tax Institute, San Jose State Masters in Taxation Program, and much more. I've known David for a long time. He's very knowledgeable, and one of the comments that he made to me was when he left Deloitte that they couldn't figure out a lot of what he was doing, so some of his plans sort of came a little unglued because of that. Anyway, so he's been helping Hoag Fenton clients get in compliance with the information reporting requirements for offshore bank accounts and trusts, which are nicknamed FBAR, Foreign Bank Account Report. And that's what we're going to be talking about, information reporting requirements for foreign bank accounts and foreign trusts. So David, thanks so much for being my guest today. It's
yeah, it's my pleasure
having you.
Yeah, nice being here.
Good. Okay, well, maybe we can start the story with, okay, how did all of this happen? Why did the IRS get this interest in foreign bank accounts and so forth?
Well, I think they struck real pay dirt when some inside whistleblower at the Union Bank of Switzerland disclosed to the IRS that the UBS was actively recruiting American taxpayers to get themselves involved with offshore tax schemes.
Oops.
And that were really quite not appropriate. They were really criminal activity. And the IRS got word of this and saw some. There's kind of a basic notion that there are a lot of people, a lot of Americans who, for one reason or another, have hidden funds and income outside of the United States. And that this is really unfair. It's not our American way. And they really jumped on this UBS thing, and they actually prosecuted UBS under criminal statute, and they paid a $800 million penalty for criminal sanctions. And then they agreed to turn over information about U.S. citizens with accounts. There apparently were 52 people that were really in really gross situations that were set up with these offshore trusts. That you form a trust, say in Bermuda, which would form a corporation that would claim not to be a U.S. citizen. You put all the assets in. It was really tremendous tax fraud. But in this same net that gathered up 52 pretty evil schemes, another 4,500 people were disclosed and turned over to the IRS.
Ouch.
And there was this notion that that's just the tip of the iceberg, because that's just one of the Swiss bank, and there are Liechtenstein banks and Austrian banks, and go down the line of where they're holding onto these accounts of Americans who are hiding income and outside of the United States. And they viewed that there were a lot of this was criminal activity, and so they put a big push on this. And I don't know how far you'd like me to keep talking about it, but that's what got it going.
Okay.
They saw the tip of the iceberg there.
Okay. So, and actually, the UBS had United States operations, so they were saying, if you don't comply, we're shutting down your U.S. operations.
Oh, yeah. But from what I've heard, now I don't know if this is really true, but I mean, I was talking to an IRS agent, an auditor that's auditing these cases, and he's saying he is under the impression that UBS, in their San Francisco office, for example, were recruiting American investors into their program, and then they would suggest something like this to them. So they were, and now some of the paperwork that I've seen is really misleading. Some of the documents say, in order to be in compliance with U.S. tax regulations, please sign this directive. And if you tell us to never invest in any U.S. Stocks or bonds, then you will be exempt from U.S. income tax under the U.S. tax laws, which is absolutely not true.
Not true, right.
Not true,
right.
but very misleading.
Okay. Well, let's see here. Well, let's talk a little bit about some of these reports. What does need to be disclosed? How do you do it?
Well, they've really beefed up the reports, and it's a double whammy because at the same time that it came to the attention of the IRS that there were these accounts and the foreign banks were actually recruiting people into the programs, we also had issues with Homeland Security and how the terrorists were being funded and transferring funds and money.
Yes.
So they threw out a big net, and Congress was very cooperative in passing some very strong laws of trying to discover where these monies were being held in secret bank accounts. And so as a result, the disclosure requirements were beefed up. The IRS says, you can have a foreign bank account, you've got to tell us about it.
Yes.
And so and they've really, again, beefed up these reports. It starts with Schedule B on your 1040.
Yes.
And on Schedule B now, it's quite clear that if you have foreign bank accounts, that they explain to you that you may have to file an FBAR, the report you mentioned. Also, if you're a beneficiary, you have an interest in a foreign trust, if you received a gift from some foreign person, you need to file a 3520 to disclose that as well to the IRS. And failure to file those two forms, there's quite a serious penalty. And if it's negligent, it might only be $10,000, and the 3520 might only be 35% of the balance in the account. But if it's more than negligent and intentional, the FBAR fine can be $100,000 a year. The penalty can be 50% a day, or an event, every occurrence of non-disclosure. So you have multiple accounts, it costs you a lot of money.
Yeah. And if it was really egregious, I think you could actually go to jail.
And if it's really egregious, you go to jail.
Yeah.
And it's criminal tax fraud, absolutely.
Yeah.
And,
I told some of my clients, some of these stubborn people that want to file, I said these people are all going to be playing canasta with each other over federal prison.
Yeah.
How fun.
Yeah. No. That the IRS does want to make an example of people that are really serious criminals in this area. But we can go on. But I'd say the two really big important forms for individuals, starting with your Schedule B on your 1040, is the FBAR, which is
the 90.22.1. It's a Treasury form.
It's a Treasury form, and which is confusing. CPAs get that screwed up, because it's not a tax form that you file normally with your 1040. It's filed a different place, a different time of the year. And some accountants say, gee, I was not engaged to prepare an FBAR report. I was just engaged to do your 1040.
Yeah.
And I think that's one of the reasons why they beefed up the Schedule B, because it says right there, if you've got a foreign bank account and your balances of all your foreign bank accounts are $10,000 or more a year, you have to file the FBAR. But that 3520 is really tricky as well, because people don't even realize that they've got their grandmother who lives in France, and she opens up an account for a grandson who lives in America. That grandson has to, one, disclose that he received a foreign gift, and number two, has to disclose his beneficial interest in that account or trust. He might not even know about it. Mm-hmm. The grandmother sets it up, tells the parents about the kid, and it's really pretty. It's a big trap for some people.
So, and again, these have sort of weird due dates. So the 90.22.1 is due on June 30th.
Right.
Of the year following. So it doesn't relate to the tax filing date.
No.
There's no extension.
Right.
And so people need to be aware of that. Now the 3520, it does follow the tax filing date. And if you file an extension for your individual tax return, then that also extends the due date for that form.
Right.
And I think we'll bypass the corporations for today because
corporations are enormous. It's a whole other topic.
Yeah.
We'd be glad to cover some other time, but it's really a big pitfall. I've seen here in Silicon Valley, you see that all the time. These people fall into the corporate rules.
Okay. So who has to file these reports?
Well, if you're the owner of the account or have a beneficial interest in the account, you have to file it. And you
have signature authority. You may not even have a beneficial interest.
Right. You can have a signature authority, but not a beneficial interest. And they make it a little easier on you. But if you work for a corporation that has foreign bank accounts and the corporation's disclosing them, you have signature authority, it's a little lighter on you. It's a little easier. But you still. And then not only that, if you're an account, it's in a joint account, and you have to disclose all the other joint account owners, and none of them may be U.S. citizens. And I was telling you before the show today that we have a client in our office whose uncles and aunts do not want to be disclosed, and creates a real bind for the guy.
Sort of on pain of death.
Oh dear. So it's does he want to face his uncles or does he want to face the IRS? And our one guy would rather face the IRS than the uncle's wrath.
So what sort of penalties apply for these things?
Well, this is the interesting thing. It depends on if it was intentional, non-filing and non-disclosure, or negligent or unintentional. And unintentional, if you don't file the FBAR, or negligent, this foreign bank disclosure where the account's over $10,000 a year, the penalty is $10,000 for each one unfiled. And of course, there's a statute of limitations. You might go back 6 years if you haven't disclosed these things. So you could have $6,000, $10,000 penalties possibly. But there are some practical ways of dealing with this. I've been now dealing with it about a year and a half, and there are practical solutions, and some of them, the formal advice to any person is you should be filing these things every single year, and if you haven't filed them, you should get the back ones in. But and then we will be talking about the amnesty program that's out there. I know, but there are practical approaches. I really recommend people need to tell their facts. Frankly, I think they're better off with the attorney-client privilege, where they can say everything that's happened and done, because right now the IRS has made it so hard on tax return preparers that if you know they have the filing requirement, you might not be able to do anything else for them. Whereas they can tell the lawyer, and if the lawyer's not doing tax returns, the lawyer can evaluate it. Now, I've had some people come and tell me that, oh my gosh, I got this, that, and the other going on. I said, well, you're frankly, as bad as you might feel about the situation, in your particular case, really you're okay. And it's not that you're skirting the law, but you're in a situation where, in fact, you happen to not fit within the law. And so some people fret. It's because they know they're going to inherit some land. Their mother and father lives in Italy.
I see.
They live in Italy, and in the will, they know they will inherit the real estate.
So eventually it may be a problem, but it's not today.
Right. And so I say,